The Wayne in Spain falls on the Georgia plains. All right. Let me mark this and let's get going. 3, 2, 1. Hit it. Boom. Never mad at the fact he's corrupt like a senator. Anyways, hey, good morning, everybody. Welcome to the Forex.Today community of nearly 17,000 foreign exchange traders stationed around the world. We get together as a community at this time of day, just after the London lunch, just at the beginning of the New York trading session, to align our satellites, coordinate our watches, get our funk on. Remember, it's Forex, not Fortnite. With that being said, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. And welcome to those watching on YouTube. Welcome to those watching on Facebook. Welcome to those watching on Twitch. Cool. G'day, mate. My name is Wayne McDonald, and as I mentioned, I'm a currency trader. Before that, I was a venture capitalist. Before that, I worked at NASA. Before that, I worked in the nonprofit world, and what else? Before that, I guess I was a baby. That's pretty much it. There you go. There's my life. So please ask questions, get involved. We'll talk everything about global macroeconomics, technical analysis, trade planning, trader psychology, all that kind of stuff. So write things down. So ask questions, be involved, treat the other currency traders in the chat room with dignity and respect, but ask good questions, write things down as you learn, and then once the webinar is over and there's a recording of the webinar, then under the recording, document what you learned. Document, right? What is your key takeaways? And if you didn't have any key takeaways, just say, hey, Wayne, you're a funny dude. Thanks for the hour and a half of your life. Just document something, even if you just say hello, because you're so busy. You can only say hi. Do that, though, because what it does is it tells the platform that you're watching, YouTube, Twitch, Facebook, it says, hey, this is quality content, and that would be appreciated. Cool. So, if you're going to trade, you're going to need charts. See the charts behind us? Right? And you're like, well, where do I get charts like that? Well, you can get the templates at metatraders.com. The link is in below. You're also going to need a broker to support the execution and provide liquidity partners, right? You're going to need a broker to have all that on your charting platform. So go to tradersway.com, bottom right-hand corner, there's an area where you can very, very quickly, and I mean like 15 seconds, create an account. You're in the back office now. Download MT4 or MT5, and there you go. Okay, so that link is in the description below, tradersway.com. The trades are executed quickly. The fees are very competitive. For example, the ECN fees right now are half price. Right? So fast execution speed, low cost, right? World-class customer service. And one thing that's very unique about Traders Way is their swaps are much better than most brokers. So if you like things like carry trading, tradersway.com is gorgeous. Thank you, tradersway.com. Cool. This is nice. Let's start here with the indices. Anything? Well, yen is weak. Dollar is weak. Pound is, it was on and off. Okay. Nice improvement on Kiwi. Nice improvement on Euro. So at first you would think, okay, this is good macroeconomics, right? Well, dollar going up, or I mean euro going up could, hey, good morning, Maida. Euro going up could be euro, or it just might be USD falling. We talked about it yesterday. So watch yesterday's video when I discussed the Bureau of International Settlements. And that video explains why this euro going up might have nothing to do with the euro. Okay? And then I look at Aussie and I'm like, what the heck? Aussie's down. Is this a trade war with China? Is it truly import-export? Is there something going on here? But Kiwi's up. So like the APAC is off, right? Asia Pacific. So you're like, So it's either Kiwi uniquely strong or Aussie uniquely weak, because yen down, dollar down should have Aussie up. Okay? Pound could be described as, Brexit. So, so anyway, so like typically in a normal world, let's say 10 years ago, I don't even know if 10 years ago was a normal world, but euro and pound would generally be up at the same time. Aussie and Kiwi would generally be up at the same time. So right off the bat, where you got euro up but pound down, that's weird. Kiwi up but Aussie down, that's also weird. And then CAD sort of still neutral across the board. So you got to be very careful, is all I'm saying. So whatever you've been doing the last few days or the last few weeks, you're probably still doing today to the same effect. Meaning, if you were selling Aussie yen, or if you were selling Aussie, you're probably still going to sell Aussie. If you've been buying Kiwi, you're probably going to keep buying Kiwi. See what I mean? The yesterday video is not in your channel. Why would that be? It was banned? Really? Yesterday's video is not on YouTube? You're kidding me. YouTube.com/Forex.Today. Really? La 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 la. It's right there. Streamed 21 hours ago. There it is. Emerald says, hey, Wayne, I started the swing trading course last night, and it was great, and it helped me figure out what I was doing wrong. All right, well, I'm going to triple the price. That's got to be worth at least $10,000, right, Emerald? So you got a deal. Dude, wouldn't it be great? Wouldn't it be great, like, you go to see the doctor, like, oh, I'm really sorry we found cancer. You're like, oh, shit, really? He's like, that's cool, but for $382, I can cure you. You're like, oh, yeah. Like, straight into the wall. Woo! What a good deal. Yeah. In the United States, personal bankruptcy, right? The number 2 cause of personal bankruptcy is cancer. So in America, even with insurance, if you get cancer, you go bankrupt. Terrible, huh? So that's one of the new measures of rich. Oh, you think you're rich because you drive a Mercedes. Great. Are you cancer rich? Can you afford cancer? Or you just got leases on your C-Class? I lease a C-Class. I'm rich. By the way, that P.T. Barnum book I told you that I want to read, he discusses things like that in the book 150 years ago, how some people try to appear to be rich when they're not actually rich, and that it's sort of a fallacy, and they should be investing their time and their money in different areas so that they can actually develop wealth instead of have let's say a wealthy lifestyle for a period of time, right? And he says, and there's funny stories though, but this could have been written. Excuse me. This could have been written today, but it was written over 150 years ago, and humanity hasn't changed. Sorry about that. Humanity hasn't changed in 150 years. But the funny thing in the stories, he talks about how rich college kids try to, they get popular because they spend all their money and they get all these friends that want to hang out and party with them, and they waste their time drinking and gambling and spending their money on fast horses. Not gambling. The way he said it is it meant like literally instead of you going out and buying fancy cars, you go out and buy fancy horses. And I just thought it was funny, like how little humanity has changed. And that's why I'm, all these little stories. I love all these little stories of wasting your money on horse and buggy. You're like, right? It's just really funny, like a horse and buggy. That's what people did. And of course, the first chapter, he comes out right out of the gates. If you're going to be successful and wealthy and powerful, you have to have a clear mind. So people that, drink whiskey and smoke cigars are weak and they're lazy and they're incapacitating their thought process, and they'll never lead anywhere successful. I'm like, oh crap. As I'm reading it, I'm drinking a whiskey and smoking a cigar. And it's chapter 1 is all about drinking whiskey and smoking cigars. He's like, what kind of idiot would waste 15 cents on a cigar? I'm like, 15 cents? I wasted $15. And then I'm like, wait, is 1 cent back then $1 now? And I get lost on this. I'm like, wow, that's fascinating. Yeah, and I bet you a chocolate bar was 1 cent. And I'm like, well, now and I get lost in that process. So anyways, I think we'll start there with the book club because I just find that so fascinating. The only thing that's changed in 150 years is how much you can buy for $1. Daniel, one of the greatest movies ever made, and of course, the best movie ever made about merger arbitrage and leveraged buyout is a little movie called Wall Street. And the rich, powerful investor hanging out with the young broker, he says, the average guy with the suit and the briefcase, he thinks he's successful because he's first class rich. When he travels first class, and he's like, you want to be liquid rich, enough to own the jet, right? Yeah. Not traveling first class. Look at me, that's fake rich. But anyways, great movie. All right. Greetings. Hey, Stevie. All right. So, So this section here makes me happy, and everything else not so much. I mean, this I'm good with, and 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 then the rest is kind of chunky. And if you're a cross trader, for example, like a cross dresser, no, you're a cross trader, you're going to probably have mediocrity unless you're doing pound Swissy or Aussie Euro. Would you do that? Pound? You probably do Euro pound, right? Yeah. But even then, okay. Yeah, it says here, Wayne, 8 months ago, you posted on YouTube asking, what else do you need to be successful? What are your biggest challenges? Yeah, and I thought I need to be doing more of that. It's just COVID has been throwing a lot of things off, right? You're good with technical analysis, double bottom, pivot points, and all that. The big challenge is having fundamental analysis. Yeah. Yeah, so I'll have to dive further into that. Okay, that's all I can say. I mean, yeah. Of course, macroeconomic central banking policy, but there's more to that too. There's some psychology to it. Daniel says, by the way, I've recently realized how different or differentiated. News is from actual government department research. Yeah, and that's why I don't use the news. All right, so let's move on. Yeah, I don't use news at all. News is silly. Here we go. So one big message I had for you yesterday when we were in here, okay, is I said the thing that will make you successful is you making a decision whether, even though this has been down and down and down and down for a much longer period of time we're looking at some point you have to say, well, we're at my buying price. That there is something mispriced, something inefficient in the gold market that created this wave, and that whatever that is, that it's over, and that you are in the process of waiting to buy. Do you guys remember that? This was yesterday. Please confirm. Okay? The reason I bring this up, and I anchor it, because that's what I'm doing here, anchoring. I didn't just say, oh, well, maybe we have a good buying opportunity, or maybe this is a good trade, because it's not a good trade. Okay? What I said is that you make a decision, and that you don't just say, but instead you understand the why, and that the why has come to an end, and that is your alpha now. That's what you're bringing. Your investment thesis is that this move is done. And therefore, you are going to corner the market on gold. Because you believe in the long run, gold will be up because, maybe completely or partially, because US dollar will fall. So your long-term vision is over the next 5 years, let's say, dollar will fall. If nothing else changes, all else being equal, if dollar falls, gold has to go up. Do you understand that? So if that's your investment thesis, right, then you have a bias. And now you know what you want to do. And you've earned value. Okay? Or you've produced value, not just a little mouse running on his wheel. Sometimes he runs left, sometimes he runs right, but at the end of the day, he's gone nowhere. Okay? Cool. So how many people are actually watching this on Twitch right now? You guys take a look, see if you like it the same, see if you like it better. Maybe you're indifferent. Okay. So isn't that interesting, right? I hope you get the message. I hope you get the message. I'm trying to teach you to be big. And I think I did this yesterday, right? You remember me doing this? I want you to be big. And I stretched my arms out, right? Big, like this. Okay, once again, when I'm doing stuff like that, I'm trying to anchor. I'm trying to attach a thought. I'm trying to attach an image to a concept so that you can have total recall, so to speak. Okay? Or I could just do an alert service, trade your money for you. You can just do what you got to do. All right. Yeah. Thank you, Daniel. Okay. Commodities. Let's go there. So there was a hiccup in in the OPEC meeting, wasn't there? Good. VJ Money. I preach to teach, because some of you never had this. Yeah, something going on, right? Well, a problem agreeing. I thought it was bigger than that. A little bird whispered in my ear. A little birdie. Yeah, they rescheduled the meeting. So you can't agree. Oh, some of you guys prefer the Twitch platform, huh? It's on uncompressed. Cool. So anyways, that's different. Canceling the meeting is not having a, it's bigger, I think, than, I mean, it's true. They're not coming to a decision or an agreement, but at the same time, they've walked away from the table. There's a little bit of a difference, right? Right? Postponed for 2 days or whatever. But the thing is, they've walked away from the table. Maybe the weather was nice in Austria. All right. So anyways, you can see how we were waiting, right? We were waiting for, well, this is anticipation of the OPEC meeting. And then here's like, no new news. Beautiful snow flurries in Atlanta? Really? My God. My yard is sunny and dry. I think it's dry. It looks dry. It's cold. I missed it. Yeah, I went outside for 5 minutes yesterday. Went outside. When you have a home office, you're just so efficient. Yeah, it snowed in northern Georgia. Yeah, I imagine so. I'm on the south side, so. Okay. XRP, down day yesterday. You had an opportunity to pick it up at 60, I think. But a couple of days earlier, you could have bought it at 50, I think, wasn't it? I guess that was before this jump on Sunday. Yeah. I should have bought it Friday. I wasn't paying attention. So anyways, we'll see what goes on here. Yeah, Victor, it's freezing, huh? Hey, Victor, have you been away for a while? I think you have, huh? Where you been, buddy? Yeah. Oh, you were yeah. Yeah, you were out. Oh, good. Yeah, you deployed out, huh? Not gone. not dead. Yeah, good. I got to get this set. How come this ain't scrolling? Okay. So down, a little down on some biddy. Notice we're in tomorrow's buy zone. I don't know how you want to play that. I think one of the things you have to do in this scenario is play out, because of the 20 grand. You have to pay attention to the future head and shoulders. So if you're preparing for, like, let's say January. So Bitcoin's going to crash in January, right? Not crash, but there'll be a significant decline in January, right? Cool. So knowing that now, what could happen in the next couple weeks is like this. And that would set up a one, right? What we call a head and shoulders. Oh, is that right? Okay, VJ Money, by the way. Yeah. I guess that makes sense, right? So Kevin asks, hey, Wayne, the results of the OPEC meeting are fairly neutral, or if they are, would you consider this? It's more of an issue of buy the rumors, sell the news. So with oil, we've been buying it up for, what, a month now? Maybe more. When we're at 30, we said it's either going to go back to 20 or to 40. And then when we're at 40, it's either going to go back to 20 or 50 or whatever. So now, for oil to continue heading up, we do need demand creation, which may be slowly heading our way, especially if we start getting vaccinations and stuff sent out. That's really going to, like in America, or in particular in places like Wisconsin, if you're allowed to open the bars again, the economy is saved. So that would be demand creation, right? Because now you need to pay the beer trucks to deliver the kegs, and and once you start selling beer, pizza and chicken wings sales are going to skyrocket. So those need to be delivered. So you can see there's supply chains for all of this. So for oil to go up, we need demand creation, but we also have already priced in supply cuts. So getting supply cuts won't be positive. It won't be good news. We already know that. We already made our money on that. So getting those cuts, I think you'll see oil prices come down. And you're like, well, Wayne, oil cuts should push prices up. Well, but we already made our money there. So at least you can say, take some money off the table going into the end of the year, and the trade is done. You were right. When you're right, you shouldn't be getting into the trade. When you're right, you should be getting out of the trade. Okay? Because you're supposed to buy knowing the future, not buy because the news came out. If you buy something because the news came out, you don't even get it. You're not even on the right planet. Look, oil cuts, right? Supply cuts. Now I should buy oil. Like, dude, where were you 3 weeks ago when we were talking about the OPEC meeting coming up, right? All right. So that's if they extend the cuts, we already know that. It'll be a profit-taking opportunity. If they extend the cuts, but less so, meaning we priced in, let's say, I don't know, I'll make up a number. I don't even know what the number is, but let's say we priced in 1 million barrels cut, right, per day of production. And they say, well, we're going to continue to produce lower than capacity, but only by 700 million barrels a day, or 700,000 barrels a day instead of 1 million, right? So there will be cuts, but less of a cut, which is actually, from how we've invested our money, actually an increase. Because we said, negative 1 million, and it came out negative 700,000. So we're off. It's a raise of 300,000. So oil will actually, drop very significantly versus, it won't be profit taking. It'll actually be selling. See, there's a difference, right? Profit taking makes price come down. Selling makes price come down faster. Think of it as you can walk down the stairs or take an elevator. or even jump down the elevator shaft, right? There's different degrees of how you get down, okay? So there's that. Now, the third and not likely scenario, but the third one would be, yes, they cut, but they're cutting even more. So they're like, we thought they would cut by 1 million, but they're like, no, 1.5 million. And I'm like, yes! That would definitely push oil prices high, but I don't think that's going to happen. Okay? Okay? So, anyways, going back to this, Bitcoin is going to fall in January, so maybe we set up the head and shoulders in December. Okay? So down for a week or so, up for a week or so, and then year end? Don't know. Okay? Now, that's just a wild guess, but that's one scenario which would produce the result that we're thinking about. Of course, maybe we go to Bitcoin 30,000. I don't know. That's not what I'm saying. Okay? But I do expect dollar to get strong, not this month, next month. And that this is definitely how you set up a head and shoulders. So I'm already thinking shoulder here. But of course, as soon as it does this, forget about it. It's done. Forget about it. Okay? Forget about it. Okay? Because it just kills the hypotheses. Okay? Think of it as scientific methodology. You're not trying to find your hypotheses. You're trying to prove your hypotheses wrong. But if you see what you expect, you know what to do. Anyways, you get it. You should get it. Will it affect other cryptocurrency? Yeah, it's right. Yeah, of course. Because I'm not talking about Bitcoin. I'm talking about dollar. So if dollar comes down, the other things are going to come down. Yeah, most likely. Remember, it has nothing to do with Bitcoin. Now, this is not yet a fundamental market. Not yet. Okay? And so Bitcoin could go up in December simply because people on vacation that are amateur crypto traders come home and they're like, what am I going to do? Spend time with my wife and children? Heck no. And you pull out your phone and look at me. And you're showing your Uncle Johnny, hey, look at Uncle Johnny. I'm a big time crypto trader. And you start trading on your eToro account with Alec Baldwin. You're like, hey, Alec, help me get rich on your and maybe just trading volume goes up because of advertising on YouTube and stuff, right? Okay, but it's harder to say because there isn't a central bank behind it. Right? So we could trap this and say, this is what happened at the end of last year. That's that. Doesn't mean it'll happen here, but it wasn't great for Bitcoin last year. Okay. Do you expect this to happen? No, because that's COVID. So that wouldn't repeat next year. Okay. Yeah, this wouldn't happen. Okay. This is kind of why I point out where I love technical analysis, but it doesn't give the why. Okay. So technical analysis would look at this and use it, or I mean, it's okay to use it as things like support and resistance, price action, all that. But it's, I guess, as the NFA would say, past performance does not predict future results. So there's something to it, but I wouldn't use it. And I mean, it's easy to say, you know, the first quarter could end bad for Bitcoin, and if it did happen, you know, you might say, well, look, it happened this year, it happened last year, but it might be happening for completely different reasons. And I wouldn't use COVID as a normal pattern. But technical analysis doesn't look at it and say COVID. It just looks at it and says high and low and all that kind of stuff. But nonetheless, price action is the best form of analysis, I believe. If you're going to go with technicals only, I would drop the indicators. Okay? Because price action is still technical analysis. But I would drop the indicators and just do price action. Do you hear me? Let me say this again. If you're starting out in the very beginning, okay? This is your first day of Forex. And you're going through and you're looking at people on YouTube. If I were to give you advice, I'd say learn how to trade with price action first. No indicators. I don't care if you use moving averages or don't use pivot points, don't use Fibonacci, don't use CCI, RSI, don't use Elliott wave. Just forget it. Forget it all. The one thing you should know is price action. And then the other things are just helpful in certain ways. Because it seems to me when people learn like moving averages, I'll just pick on one, and they're like, this is so meaningful, this is so meaningful, this is so meaningful. And they're looking at the lines to tell them what to do. Versus I got to these lines because I wanted them to confirm what I was looking at. There's a difference, isn't there? When you add a MACD, when you add an RSI, when you add Bollinger Bands, when you add, I'm looking for them to confirm what I'm thinking, not tell me what to do. And so knowing price action makes everything else logical, so that then you can then use your indicators to confirm or deny what you think is logically happening. Oh yes, technically the market went bullish here. Okay. Yes, this is a reset. Yes, this is a reset. It's also a role reversal. Yes, right? Reset, role reversal, so on and so forth. And now your indicators are telling you what to do. So for example, when you stare at your speedometer on your car, it's not telling you how to drive. It's not your GPS. It's not telling you where to go. Okay? Unless you're in a Tesla. Then, right? Turn on autopilot. Done. Right? But there is no such thing in this market. So you have to be the one that knows how to drive first and foremost. And it's very helpful to have a speedometer, but you don't need one. It's very helpful to have GPS, but you don't need one. Okay, so anyways. Do. Just looking at Brent. Brent's better, huh, than WTI? Yeah, that's better. So if it doesn't go up because of the OPEC meeting, then it's useful information, technically speaking. Okay? What it represents is someone else's interpretation of the fundamentals. Okay? If this doesn't go up, think of it this way. It's all logic. This is supposed to go up. Everyone in the industry wants it to go up. Do you understand that? Everybody in the industry wants this to go up. And everyone that's running a central bank is trying to create inflation. You're not going to get inflation unless oil prices go up. Okay? So everybody wants this to go up, including the central banks. The European Central Bank would like oil prices to go up to give them the inflation they've been trying to create for the last 12 years. Cool. So what does it mean if it goes down? That something disappointing has happened. And people are like, oh man, not this time. So you could look at this and say, if this does not go up, then there's some fundamental disappointment. Either we didn't get the demand creation or we didn't get the supply destruction. The OPEC meeting was worthless. But when you run a cartel, cartels never agree anyways. Okay? And if you do the game theory of cartels, right, which I've done the game theory of cartels, every single person in the cartel is incentivized to cheat. So even if they all do agree, it's all with a wink, wink, nudge, nudge, and all of a sudden Libya is producing twice as much that they agreed to. Shame on you, Libya. Okay? The Tunisians don't cheat. The Libyans do. Okay? So it's likely that they're not going to do what they're going to do. Or if they don't even agree to do something, right? I mean, so if we drop below this, something fundamental has changed. And that's where you should learn how to do technical analysis properly, because it confirms or denies the fundamental trend. And you should understand what your chart is trying to tell you. A lot of technical traders, they don't get it. It's just video games. Down is down, up is up, that enough is enough. That's it. Right? Some people would trade it just because of that candle. Okay? So I'm suggesting a little more why in your analysis. That's all. So to do that, you have to understand the market participants. Who wants Brent crude to go up? The oil industry? Yes. The entire global energy industry wants that to go up. How about the European Central Bank, as I mentioned? Yes. The European Central Bank, trying to create inflation, wants Brent crude to go up. Okay. How about OPEC? Every country in OPEC. Right? All of which are emerging markets. So you're like, huh. Well, what about the EIA and IEA countries? What about, how about Canada, Norway, the United States? How about these countries? Do they want oil to go up? Yeah, they want it to go up. Does Elon Musk want oil prices to go up? Yeah. If oil prices go up, he sells more Teslas. Everybody wants this to go up. So if it doesn't go up, then there's a fundamental disappointment. And the more you understand the players, the better of a trader you'll be, I think. So one of the books I do want to put on the list for our book club is one that goes through and describes market participants in multiple different types of markets. Okay. Rookie Trader says the consumer doesn't. It's actually not true. Okay. So you can Google price elasticity. Oh my God. Here he goes again with his stupid economics. I know, right? Look up price elasticity. And what you'll find out is gasoline prices go up by, let's say, 100%. How much demand is destroyed because gasoline prices have doubled? 5%? Right? They're like, gasoline prices have doubled. That's outrageous. And then they fill their car with gasoline. Right? Europeans pay like $20 a gallon for gas. They still drive. All right. Okay. It was too high yesterday, so I don't like the setup. Okay. This sets up a reversal, inverse head and shoulders. So I don't like the setup, but maybe you could tag along if you breach this and then throw on day trades down. Because it's still not a higher high. Okay? So it's too high. Like, what is that, a 786? Yeah. So it's suggesting double bottom. And then the pattern is suggesting inverse head and shoulders, and then the distribution of the data set is suggesting kick off the mean to the upside if those other thoughts are true. Remember, it's not predicting, it's just telling you. So if you thought this could be an issue to the upside, then there's likelihood you'll get it. Okay? You guys see all that? So the 786 predicts a double bottom. This predicts a roll reversal, right? And I guess you would say this to this because of the 786. They're kind of both doing the same thing, but suggesting the inverse head and shoulders. Now, none of this has to play. Okay? None of this, like, this isn't the gospel truth. I'm not saying this will reverse. But what I'm saying is, if you think it might and you're bullish on this, you need to be setting it up right now. It's either going to go up off of this price, or this price. Okay? The next, so you might as well just say somewhere around now. And if you're a bull, the next one would be the double bottom. And then you'd set up a 1, 2, 3. So here's your plan A, plan B. Notice plan A is right now, so time of day would make that hypercritical. Now, if you are a bear, and I am a bear, I want this to go down, then all of what I just said says that the probability of risk entering our trade is increased. Okay? That you might be saying, well, this produced a that, and that produced a this, and now this will produce a new lower low. But based on technical analysis, this says the probability of this making a new lower low, the probability has declined. The risk level has increased. So this is less probable to produce a result like this. So now you need to be careful. You see? So one man's opportunity is another woman's risk. And that's actually pretty philosophical. It's probably true in many ways. Okay? Now, let me ask you, did you guys see all of that? See, I would ask myself, how much of that I agreed with or saw? How about that? And how much of that analysis did you not see? And I would think about that. I think the thinking process is important. So ask yourself, what did you see? What didn't you see? How and what do you disagree with? You're like, Wayne, that's a little silly. Okay, cool. Then good. Then document that. Okay? Wow, 10 people on Twitch? That's it? Only 10? Come on, guys. Go try the Twitch thing. See if it's better. It might be better. So it said that it's uncompressed, so it's faster. Or maybe it's slower. I don't know. Check it out. Just check it out. See if it's better. Okay, now. Okay. So USD ZAR. Someone asked for euro dollar. Okay, let's do euro dollar. Let's go over to the euro. It's probably under market. Aussie yen, euro dollar. Okay, let's do euro dollar. Okay. So we were doing this yesterday. Right? My profits seem so far away. Now I fear they're not here to stay. All right. So here, this is what's going on. What's going on? We're rising up again. So once again, we're hitting 120. So hopefully you've already decided what you want to do. What you want to do, shit. Got a pocket full of pips and my homeboys do too. Okay, anyways, right? Bears sold it. Bulls, I don't know if bulls bought it or stayed with it. Okay. So maybe we could just change this. Let's change this. It's still a little out. Okay. It's not a great opportunity. It was OOP. Okay. And everyone that has taken the training course on how to swing trade looks at this and says, oh, perfect. Oh, it was OOP on Monday. And you're like, yeah, no, I'm going to buy it down here. And now you're smiling like Mickey Mouse. I don't know. Probably get banned on YouTube. That's copyrighted, man. But anyways, anyone that has done the swing trading course at FX Bootcamp and says, oh my God, that was so OP, and I knew exactly what to do after that, and then, oh snap, 3 points, nothing but net. Free money! Hey, don't I have the money thing? How do I do that? Money, free money! Oh, it's funny, it opened that too. Huh? Free money, free money. Yeah, how funny though, right? So, yeah. So anyways, thank you, Swing Trading, to the Illuminati. Yeah, Swing Trading Thursday, that's right. Yeah, so it's funny, like, so many people have not taken the swing trading course, so they're like, Wayne, analyze it for me, and I'm like, I look at this, and it should be ridiculously clear, right? And then Aaron got that there. You got it there. Very good. A new trader. Yeah. Cool. See, so it's like one of these things, guys. If you don't know this, you need to do the courses, because there's dozens of people here that look at this and say, yeah, that was perfect. And you're like, what do you mean it was perfect? What do you mean? Like, what does this mean? I'm like, wow. So this setup, by the way, is only bullish. That's the first thing. I only have this setup. Okay? It says next projected buy zone. I know there's another pivot in the way, but it says the next, it doesn't say sell zone. There's no selling on here. Okay? I've removed almost everything. Double bottom, chow. Okay? So I got this on a 1, 2, 3, by the way. 1 is the double bottom. 2 is the higher high. 3 is the roll reversal, and I got it there. Cool. So since then, check it out. Up, 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 down, down, buy. 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 The first part of it, obviously, these are my buy zones. Notice there's no sell zones. I have no interest in selling this. None whatsoever. So I've removed those options. I don't like using the word option because of the word option in trading, but I removed those opportunities. I don't think sell. I don't look to sell. I don't see a sell. I'm unsellable. So I only look to buy, and we call that bias. And therefore, I only have buying tools involved here. Okay? The next part then would be like price action. Another part of this would be like moving averages. So like right here, so I started reading my book, by the way. I read some of my book. I read 3 or 4 chapters. And, this is out of the book from, I don't know, what is it now, 12, 13 years ago? I'm like, this makes me bullish. And so after that, I start buying 5-8 crosses up. Right? Like, isn't that nice? That's it. After the cross down here, I only buy. And I buy using very specific tools. There's a buy, right? There's a buy, there's a buy, there's a buy, there's a buy. And one part of this methodology is they're all individual trades, right? Buy, exit, buy, exit, buy, right? Buy, exit, buy. Or, right, if you're like a carry trader or a position trader, the way you do it is you buy, you buy, you buy. You notice I'm not exiting. And you keep buying until the 2155 crosses down. And then you're like, profit, 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 loss. Okay? Cool. So there's moving averages. Now the price action stuff, double bottom, higher high. So you have to document the old high, okay? And that produces the roll reversal, okay? So this is a buy. Simple price action. Remember I said if you had to learn anything, right? You don't need to know anything at first. Where's my little arrow thing? There we go. You don't need moving averages to be first. But as I described, if you know what they mean, because remember my methodology, what we do is we measure and separate market forces from price action. Super helpful. But do you need to separate market forces from price action? No. Right? Just something I did that was helpful to me. Cool. So now what if all you had was price? Now I'll leave pivot points on there because I like pivot points because they're predictive. See, I know what I'm going to do next week already. Well, that's not backward looking, that's forward looking. So, right? So it's a leading indicator. Price action is also a leading indicator. So like I said, this tells me that. Cool. Now this is a big point of view, right? Then you get even smaller points of view like double bottom, higher high, higher low. Look, the same pattern that occurred here on the big time frame occurred on a lower time frame. And remember I said if you could simply learn how to do a 1, 2, 3 pattern and do it 100 times and see if you get consistent. Of course, no one's going to take me up on the advice, but if you did, it would probably change your trading career forever. But no one's going to do it. So then you get to this part where up, 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 down, down, buy, up, 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 up. So now, like I just taught you, you would take the old resistance. Oh, look, it becomes support. Cool. So as long as we're above there, we're bulls. Went up here, neutral, ooh. Ooh, too bad, too bad, too bad. Breakout, market, roll reversal, buy. Up, market, roll reversal, buy. And if we do get a higher high, then I'm going to mark it and check it out. I know what I'm going to do next week. You see that? I already know what I'm going to do next week if that breaks out. I don't know the time, but I know the price. Holy crap. Have you been doing something else? Have you been trading some other way? Do you just make it up as you go along, or do you have some complicated proprietary nonsense from another group? Are you waiting for the MACD to tell you what to do? Like, if you're not doing this, what are you doing? Now, I'm self-taught, so honestly, I don't know what else. I don't know anything else that... There must be other things at work, of course. There must be aliens in space. But this I found through sort of the natural laws of the market. How many to the upside? Stingray says, does Rob Booker sell bots? That's interesting. All right, so to answer Alex's question, when you use pivot points, that's all predefined. So how many pips are up to the upside? Well, this is going to 1.207, right? It's all predefined. And then you might say, well, where do you put your stop? Below support. So if you know how to trade, like you take the The training course, all this is predefined. You're like, they're not even questions. It's all math. What's up, Terry? Brothers of the same mind, I'm blind. Cool. So what if you haven't been doing this? What a wake-up call, huh? Now, most of you have been here for years, so you're like, this is nothing new. Is there anyone new here that just went through this with me over the course of like 15 minutes? And it was a breath of fresh air, or suddenly sunshine got shined on the darkest, deepest fears? Did anyone just find it like an eye-opener? Or am I just preaching to the choir? Yeah, good. Yeah, cool. So the big question now is, what's going to happen at 120? Well, it's either going to double top or it's going to break. Yeah, of course. Price action, up or down, down or up. So the big question now, and of course I don't know what's going to happen here. How could I? Okay, so you need to make a decision. What are the probabilities of going higher? And if they don't go higher, what are you going to do about it? Thank you, Daniel. Daryl's like, I was blind, but now I see. Cool. All right. That's that. So we know Aussie's down, right? So we can then switch this over to grab a Kiwi, let's say. Nothing's right, I'm torn. Okay. So we can put this on the same template I had that before, swing trading bullish bias. And there we are. Neat, right? So you can see back then we were in a range, right? And breakout, pullback, buy. Is that right? Victor says, I learn on every webinar, but I want to say yesterday's webinar was up fire. Really? Any particular reason? Yeah, Alex, just join join FX Bootcamp. Because in FX Bootcamp, there's the day trading course, the swing trading course, the fundamentals course, the MT4 course, the taking control course, there's the price action course, there's, gee whiz, there's a lot of courses, right? Yeah. Happy birthday, Maida. Happy birthday to you. Happy birthday to you. Happy birthday, Maida. Happy birthday to you. All right. Yep. So pound Swissy just stuck. We'll take a look at some other dollar pairs. We'll see if they can lift euro through the 120. So I guess we'll have to do what? Scan USD pivot points. Oof. Ugly, huh? Ugly. Okay. So let's try a completely different methodology. Okay. Price drops below. So let me highlight this first. Key line here, huh? You see how important this line is? Okay, red hot, ice cold is one way of looking at this. So one method is down, 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 up, up, sell. That's one method. Okay, it doesn't always work because you're like, well, how didn't I know? Well, that's why you have a bias, son. Okay. How could I have not known? You ever get this question like, how did I not know if this was going to do that? Well, you wouldn't because you don't know what you're doing. When I hear that question, like, you're looking for tools that will tell you the future and make you filthy, stinking rich. Like, they don't exist. So, like, how do you not know? Or how do you know? Well, because of you. Like, right? I don't know what it's going to do, but I know what I'm going to do. Right? So everyone here knows I can only sell this. So would I sell this? Yeah, sure would. Would you? I don't know. How did I know it was going to go down? I didn't. I just knew I was going to sell it. There's a difference. Okay? So anyways, that's one way. That's sort of a macro. But notice in here, down, 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 up into the red, sell, down, 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 up into the red, sell, down, 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 up into the red, sell, down, 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 up in the red, and uh-oh. So imagine now you had 5-8 crosses up. That's where you'd take your profit. Imagine you're also throwing in time of day like London open, New York open, London close, out. What if you had pivot points that also told you out. Okay? Then your Asia fade, and then you start the process again. Why? Because you're a boss. But there's enough information here to trade. Would I like additional information or different information as well? Yeah. Okay? But it's not necessary. The most important thing is you made the decision. Okay? Okay? So imagine, should you sell now? No. 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 Should you sell now? Yes. 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 Should you, right? Yes. 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 All right, so who's watching on Twitch? And who's watching on Facebook, if anyone's watching on Facebook? Anybody? Twitch? Roderick says that was definitely an eye-opener. Cool. If you both. Well, if you're on Facebook, say Facebook. If you're on YouTube, say YouTube. If you're on Twitch, say Twitch. YouTube and Twitch, YouTube. So no one's saying Facebook. So either the messages are not coming through or no one uses Facebook. I think Meta uses Facebook from time to time. Just interested in seeing what platforms you prefer. So I have a multi-stream chat, which is interesting. So thank you, Meta. That's too nice of you. I'll put it in the cigar fund. Yeah. Yeah, my kids would laugh at such a thing. Facebook's for boomers. Okay. What else should we do? Did we do Kiwi? I know did we do Kiwi yen or Kiwi dollar? I guess we did. Did we do this one? In at 66, now we're at 70. The cool thing is we're above 70. Did we do this one or was it the other one? Sometimes I think we did Kiwi yen, right? I can't remember. Maybe let's just pull Kiwi yen on here and see if that rings a bell. Kiwi yen is highlighted. Yeah, no, we did Kiwi yen, so let's do Kiwi dollar. It looks like the same trade. Why can't I find these things? I'm always so slow. There it is, right next to it. All right, so we did Kiwi yen. Here's Kiwi dollar. Why do they look so similar? First of all, swing traders will say, oh my God, he OOP'd it. I OOP'd all over it. Okay? The reason they look the same is I traded them for the same fundamental reason. Okay? But simple little OOP. Okay? Another way you can look at it is on the 4 hour, the 21 crossed above the 55. So you would stay with it, ride the 21. I'm bullish, I'm aggressive. Nice, right? Okay, just letting it work. What do you guys think? So one of the things you might be saying is, well, Wayne, you're using a tool that says that's the target. But how many people here know it's true that I expected to blow through the targets in November? Wolfgang says, oh no, Terry says super extended. No, it's not. When you say extended, it seems like overbought. Well, it's not overbought. Okay. But yeah, so everybody here knows, or at least in the swing trade, we talked about it in October and September even, maybe even July. We talked about in November, we're going to blow through the monthly targets, and I'm not going to be interested in them. Another lesson that we had is hitting these targets the week after the election. Here's the election. So we're in here, right? People, when we're in here, I'm like, hey, you need to make a decision, because normally this is the most aggressive target you have. And we just, with this velocity post-election, you need to decide, you need to decide what you do in situations like this. Take profit, which, right? Or not take profit. And this goes back to when I said you should have a contract with yourself written out. Okay? I think the question was something like this. Wayne, what do we do now that we're all amped up for the election? Right? We had prepared for months and months and months for election night. So the week of the election, people are like, what do I do to prepare? I say, write down in a document a contract with yourself on what you're going to do in here when we hit our targets. You must make that decision first. So that's what we were doing here. And then when we were here, I'm like, well, you better do what you said you were going to do, right? Otherwise, you don't have conviction. You don't got it. Okay. So now I'm looking at this and, right, I have no concerns here. Okay. So lastly, the next message I'd like to offer you is how difficult is it to make these pips day in, day out when you get in, take profit, right? Get in, take profit, get in, take the loss, get in, take profit, get in, take the loss, get in, take profit, get in, take profit, get in, take the loss. day after day after day after day after day. I've done it for years and decades. So I know what it feels like. And it's hard work, but it's also, I find, a lot of stress because you have to start fresh every day. And every time you pull a trigger, there's sort of a potential to lose, right? Now, do you think your 25 pip trades are any more difficult than this trade? And how much less? Because the answer is no, it's not any more difficult. But I did a little bit more research that gave me conviction. Now, in my swing trader group, we went back through 4 or 5 different election nights. And I showed the group what happened. And I said, I get my conviction from my research. And here's an example of the research. We went through it. I said, look beyond the night. What happens over 5 weeks? Can anybody confirm this? I said, what happens for the period of 5 or 6 or 7 weeks after the election? Not election night, but weeks and weeks and weeks after. Because I don't know what's going to happen. And of course, anything can happen. But we have to look at things from more of a probability. What is probable? What probably will happen? So anyway, so it's not any more difficult. It's the same click of a mouse to enter the trade. But those were easier pips, weren't they? Now I look at my rules of engagement and, right, we should be riding the 21. And if it doesn't, it could be a problem and I will have to adjust. But right now, my risk is opportunity cost. See, I can get out right now at 70.50 because if I don't, it'll probably have to come down a couple hundred pips before I even think of taking profit. You're like, Wayne, you threw away a couple hundred pips. Maybe. Maybe not. Okay? But it's a good problem to have versus actually losing money. I just lose opportunity. Okay? Now, to add to this excitement that I just covered with you, because that's election night, that's easy. How about this? The next week, this is a swing buy. This is the target. This is a swing buy. This is the target. What? Yeah. So you could, this is a position trade. This, underneath it, is a monthly, well, I guess that's the position. This is more of the political. This is a flow trade. This is the monthly play. This is the weekly. This is another weekly. Okay? There's so many trades here. It's cool. Okay? You know, there's so many good trades here. Okay? And remember, and I covered this 2 weeks ago and I think 4 weeks ago at Off the Charts with Wayne McDonald. If you guys want to join those, I'll post that in the link here in the chat. http://www.youtube.com/fxbootcamp. That went on YouTube, but not Twitch. Sorry, Twitch. One of the things I discussed there is why I'm a bull on the Kiwi dollar and not necessarily the Aussie dollar. No, those are monthlies. Okay. So I'm a bull on Kiwi. So I look at this, I'm like, yeah, I'm riding the 4-hour 21. It's going up. Yep. Caught the volatility of the election night. But notice the general plan, okay, as a swing trader now, any swing trader knows what this is. The difference between swing trading and position trading, a swing trader would exit here for sure, 100% of the time. A position trader doesn't have a price target. They have a time target. So, right? So I'm treating it like a position. I don't have a price target. I only have a time target. But any swing trader looks at that and goes, obviously. Oh, for sure. Right? So now, just let her go, let her go, let her go, let her go. Yeah, 120 is still holding. Yeah. So the question is, what do I mean by a time target? Well, we only have price. Oops. On these charts, we only have price and we have time. So I'm saying it's not price. Okay? So if we were just doing a normal swing trade, my price would be 73.50. Okay? So this tells me if this goes up, it's going to go up to 71, then it's going to come back down to 70, then it's going to go up to 72, then it's going to come back to 71.50, and then we're going to go up to about 73, and I would exit. Not a problem. That's this week, that's next week, and the week after that. So there's a 3-week plan. Okay? But that would be price-based. I'm also, so if it hit that, if it did something like that, I would combine my price and my time, and I would take it because it's price and because of its time. But instead, what if it did this? Well, by this point, or hopefully this point, actually, by this point, I would exit. You're like, well, why would you exit? Why would you exit here? It could go up here. And you've been in it since October, or sorry, November. Why not ride it through January? What if there's a stimulus? What if there's and what it could, but I don't think that way. So I'd say, yeah, I know. But my plan is, you know, in the next, certainly 20 days, probably within 20 days, I will exit. What price will it be? I don't know. Okay? But this is my alpha. This is what I do. This is my analysis. This is my experience. This is how I behave. Does it make it right? No. But this is me. Okay? I want you to be you. You do you. I be me. Okay? Because I don't know. See you, Pete. Okay. So my plan is I'll exit at 73-ish, or within 21 days, whatever comes first. What do you think? Was it a good day? Please like, please subscribe, please leave a comment on the recording. Please visit Traders Way, tradersway.com, and open up a demo account. Do it today. Just out of loyalty, visit tradersway.com, open a demo account right now. What else? Yes, FX Bootcamp is still 76% off. And there's some changes coming in the near future to that. So, yeah. Any last questions, maybe? Wayne, any offer for the membership group? Yeah, Anthony, it's 76% off. fxbootcamp.com. Click the giant button that says join now or whatever. Click the click here to begin button. Pretty simple, right? Right on, Aaron. Cool. So which one? I said price action. Basic training is a good one. David Pegler does the price action one and the day trading one. And you'll be surprised. You're like, dude, this was like 2006, this one. And you're like, it's still the basis of how I trade. It's amazing that nothing's changed. Yeah, and there's just, yeah, day trading, fundamentals, swing trading. I mean, you just got to, where's the swing trading one? Oh, swing trading. Yeah, yeah. Swing trading, fundamental, day trading. Yeah, I mean, wow. Yeah, you got to know this stuff. All right, cool. Nice. Good job, meat. Elmer, yeah. Don't do the ones you want to do first. So anyways, let's bring this one up. Let me do it again. Do it this way, like the biggins. So like when you live in Georgia, there's biggins and there's itty bitties. So how would you do this? These are probably some sexy ones. Learn how to plan your trades. I would start there. Introduction to Forex trading. Knock these out. This is 12. This is 3. If you don't know MT4, that's very helpful. Then I would maybe go through Forex Trading Basics. It's 10 videos. Like we're talking about, like this is 9 hours or something right here. Maybe 8 hours, just basic training. Just it gives you an overview of so much: how to trade the news, how to use pitchforks, how to use moving averages, how to use oscillators, how to use Fibonacci, and how to use pivot points. And like, there's so much in there. I'd get that down. Then I'd start tiptoeing in to some price action. So I'd probably do the price action one. Or, move from basic to fundamentals. Like 12, like it'll take you a week to go through the fundamentals course. Right? And then I guess price action, day trading, swing trading, that kind of stuff. And this is the new course, right? The course was updated November 19. Cool. I should probably watch it again. I don't remember it. Very cool. So yeah, I would mark it like, which ones do you want to do the most? Which ones do you want to do the least? And start with the least, knock them out. Otherwise you'll avoid them. Knock those out and work up to the big sexy ones at the end. Because you could skip stuff and not quite get the message. Yeah, that's 2019, Danny boy. All right, cool. So that's that. Kevin says he really liked the fundamentals course. Cool. Yeah, I like doing it. All right, so Simon also asked about a time-based exit. What I'm talking about is I'm incorporating seasonality. Right? Wolfgang, I'm not following what you're saying. So it has to do with seasonality, where my analysis tells me that if there's technical room to run, I'll let it, but there's fundamentally less time. So it has to do with my plans for January. Just the one I attached, but of course you could watch everything, Kevin, right? Yeah. Oh, so Wolfgang, you're saying if you know fundamentals, it helps a lot. Well, it does because, it tells me why. And very often when you're sprinkling in, again, my alpha, my ability to, let's say, outperform a benchmark or other traders, is that I have more experience. And my experience tells me that I want to behave a certain way at a certain time. And just so happens, between now and the next 21 days, I'm fully open to adjustment, right? So that's why I'm like time-based. Like, I'm not looking at this and saying just price, like I typically would, meaning my target is 73.50. If we get there, then price and time work together and they both agree, take the money and run. But if we don't get to that target, am I hoping to get it to it January? No. So that's why it's time-based. I know certainly within the next 21 days, I'll exit everything. But that's me. I don't know if it's right. It's just what I'm going to do. So therefore, I'd like to stay in this as long as I possibly can. But even if we blow through 73.50 and we're on our way to 75, you're like, Wayne, this is crazy good. I'm like, yeah, I know, but I got to go. Because of the time issue. So whether we're here in 3 weeks or here in 3 weeks or here in 3 weeks, I will leave the market. I will no longer be a market participant. So there's a time factor that I have here that I didn't have here, 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 or here, or here. But there is going to be a time factor up in here. Right? And I believe I exited last year, about the 15th. And we know in that video I pulled up yesterday, I think it was the 19th that I exited. December 19th, right? December 19th, September 5th, December 15th, December 19th. And so generally, like, let's say certainly between 10 and 20th, the 10th and 20th, I'm super hypersensitive. And so I think it was last year I exited around the 15th, and some of these pairs like Kiwi dollar went up another 100, 150 pips without me. Didn't matter to me, I was out. I was a bit early, sure. Okay. But 2 weeks after that, I looked smart. Cool. So so it's not easy for me. I don't have a perfect answer for these situations. Therefore, I have to analyze. And so that's what I'm doing here. Is I'm saying I have a time-based target. I'd like to stay in as long as I possibly can, but then I'm going to leave. Right? So right now, we have to deal with this 120 issue, right? Right? So I'm still at 1,940 pips. But it's only on 6 trades, right? So I'm up 300%. You see that? I have $600 invested, and I have more than 1,800, right? So I'm more than 300 pips, or 300% profitable. Okay, that would be my internal rate of return, IRR, which is very misleading, of course. IRR, right now, I'm above 300%. Because the problem with IRR, and you get this from like venture capitalists, you get this from real estate funds, you get from a lot of different firms. Maybe a leveraged buyout firm might do something like this. They're like, well, our internal rate of return is 300%. It's not the important number, though. It's very misleading. Because I only have $600 out of $36,000 invested, right? So you're like, well, that's not very good, right? Because what's $2,000 out of a $36,000 account? It's tiny, right? Let's do it. Calculator open. Right? Okay, I'm only up 5.5%. But it was only 6 trades. 5.5% a month is enough. Okay? Okay? That's a decent month. It's only on 6 trades though. Okay? You see where I'm pushing you? I think you could have more than 6 trades open. Okay? But with 6 trades and knowing how to trade properly, because all we did was go from the bottom of November to the top of November, right? So it's only 6 trades with an internal rate of return of 300%, with a total return of 6%. But what I was preaching back in August is that I want you to try to get 36 trades on, not 6. So these are just example trades. This is how you do it. This is how you do it. Here's another one. Here's how you do it. Here's a third one. Here's how you do it. Here's a fourth one. Here's how you do it. Here's a fifth one. Here's how you do it. Here's a sixth one. Here's how you do it. And then here's how you let it run. This is how you run. This is how you let it run. You'll never get filthy, stinking rich if you don't let it run. But you're supposed to be building portfolios. That's what my swing trading group does. That's what our professional track. So we have another group of people learning how to be professionals. You need to be able to build a portfolio, but you also need to know if you're going to tear it down or not. Okay? I typically do a tear down at the end of December, but I could say I'm going to be in this portfolio for the next 10 years. I could also make that determination and decision. Okay? Cool. So what do you think? Is it going to break? Okay, so I'm trying to give you a message of professionalism, of patience, of doing the work and the research so that you have conviction, and that you treat Forex as a business, as a profession, as a business. So it's not a message of get rich quick. Make a lot of money quick. That's what scalpers would do, and that's very sexy on YouTube. But I don't think they're going to be able to build the type of empire that you're going to build. I don't think they're going to have something that they can give their grandchildren. I don't think that's what they have. So I hope you accept the message, right? I hope you accept the message, the lesson, the advice, and then, of course, interpret it any way you want and do something. Behave the way that you want to. Okay? Cool. Well, thank you for being part of the Forex.Today YouTube community. Thank you for being part of the Forex.Today Twitch community. Thank you for being part of the Forex.Today Facebook community. Thank you for being you. Thank you for being special and unique. Thank you for being a guiding light in this world of darkness, and the camaraderie that you show and the respect that you show me every day. I appreciate you. So, peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Cheers.